Investors in Tesla have been through hell in the previous few months. Both long-term investors and short-term traders have sustained massive losses due to the dramatic increase in the share price. The price of Tesla shares had increased by more than 100%. Although Elon Musk may have lost almost $30 billion on his Tesla stock holdings as of January's closure due to the company's 12% year-to-date decline, the coming year has the potential to be the most profitable of his whole career. The stock awards for Musk might be worth billions of dollars if predictions about Tesla's financial performance prove accurate. Musk receives no regular compensation from Tesla, not even a bonus. Instead, his compensation is contingent on the achievement of financial and market value goals by the organization. Elon is just as invested as the rest of us. To what extent would you need to agree with him? When can you first begin buying stock? If you want to know more, just keep watching the video. Elon Musk, CEO of Tesla, was promised 101 million split-adjusted shares as part of his 2018 compensation package. These shares would be distributed to him in 12 equal installments as the firm met various financial goals. Securities, typically financial instruments like bonds or mortgages, are pooled together and then segmented into tranches so that they can be sold to a wider range of investors. Even though Tesla's recent decline has taken it off the list of companies with a $1 trillion market cap, all market value benchmarks have been met, and 7 of the financial targets have been met so far, 2 in 2019, 2 more in 2020, and 3 in the first 9 months of 2021. That means he has already received 59% of the total 101 million alternatives available to him. The remaining 5 financial goals for Tesla are expected to be met by the end of the year, giving Musk all the flexibility he could want from his 2018 package. If they're right, he'll receive a record-setting 4 tranches this year and another in early 2023, when the numbers for the fourth quarter of 2022 are in for good. Wedbush Securities technology analyst Dan Ives predicts Musk will receive all 5 tranches this year if Tesla continues to grow at its current rate. He would be able to buy 8.4 million shares of stock at a discount of $70 and 1 cent per share if he exercised each of the option tranches. If the stock price at the time the options were given in 2018 was the same as the January closing price of $930, then the value of each of the 5 tranches of options would be $7.3 billion, for a grand total of $36.3 billion. It's likely that he'll be eligible for at least 1 round of options, and maybe even 2. He should have 3 tranches in hand by the time Tesla releases first quarter results in April, and a 4th by the time the company reports full year results in June. If Musk receives any options at all in the next 12 months, he won't have to worry about paying taxes on them for at least 5 years. Since he won't owe any taxes on the options until he actually uses them to acquire more stock, he won't do so until the options are due to lapse. He did this last year when he paid an unprecedented $11 billion in taxes after exercising 22.9 million options that were set to expire in August of 2022. He is unlikely to use these newest options until 2027, as they do not expire until January 2028. The 59 million options he has already gotten as part of that 2018 compensation package have not yet been taxed, and the 42 million options he is likely to earn over the next 12 months will also not be taxed, regardless of their value. The worst aspect of the year for Musk is the performance of Tesla's stock. In addition to the 59 million shares for which he has options, he possesses a total of 177 million shares. That's why the wealth will take such a big knock in 2022. However, Musk is worth $241 billion, according to Forbes' real-time billionaire tracker. Tesla is valued more than the 10 largest automakers in the world, despite recording much less sales than each of them, causing investors to worry about riskier tech stocks like Tesla as the Federal Reserve seeks to squelch inflation with higher rates and less stimulus. Because of this, investors are fleeing the stock in droves, making it a prime example of a firm with a problematic valuation. Shares of Tesla are caught in the storm, Ives warned in January 2022, as U.S. stocks plunged. At one point, Tesla's stock price was down by as much as 10% on the day, but it ultimately ended the day down by only 1.5% along with the rest of the market. However, that is still enough to wipe $3.3 billion off Musk's fortune. The recent drop in Tesla shares has been seen by many experts as a transitory setback. By the end of 2021, half of the analysts polled by Refinitiv predicted that Tesla's stock will be higher than it was at the beginning of the year. There are 18 analysts who recommend buying the stock, while only 10 analysts recommend selling it. I've mentioned before that investors should pay close attention to Tesla's earnings report because of the stock's recent drop, down 25% from its record high in early November. They'll want to know more about your intentions to increase output. At its 2 new assembly plants, and when it wants to release the Cybertruck, a pickup truck that will compete with those of established manufacturers like Ford and a startup electric vehicle manufacturer like Rivian. Shares could be reversed if results are better than expected or if the report is disappointing. Now that I've said it, how does it affect you as a Tesla investor? Stocks of Tesla, which reached an all-time high in 2021, will thereafter drop in price. It also implies you can buy as many shares of Tesla as you like in order to get wealthy. In times like these, when everyone is worried about a stock market crash because the market is in a downward trend, investors might find the best possibilities. If you want to buy all these stocks, how much money do you need? You keep your money invested, sell off some shares to cover expenses, and let the rest of your money grow. The term FIRE movement describes this state of economic freedom. Take early retirement. Imagine you have $200,000 to invest in the stock market and your return on investment is 10% per year. In 10 years, you will have $500,000 if you just leave it alone. You will run out of money in 7 years if you start withdrawing $40,000. To retire comfortably, $240,000 is required. On average, investors anticipate a 20% yearly return from Tesla. I think 20% is reasonable, given that Tesla is a firm that, at its core, expands at a pace of more than 50% each year. These aren't made-up numbers, either. Investing $240,000 in Tesla stock and withdrawing $4,000 annually for the next 30 years will still leave you with $240,000 in savings. To what end has your capital not shrunk? You should only withdraw the amount you need and put the rest into investments. We estimate that 1 share of Tesla stock will be worth $8,636 in 2030. Thus, if $240,000 is needed in financing, then 27.7 shares would be the appropriate allocation. You can get today's stock price of about $900 by converting 27.7 shares. In today's dollars, it's barely $25,000. Inflation is the next major issue. While the threat of inflation is real, the appreciation of the stock market will far outpace price increases in general. So, what exactly is the issue? Inflation as a whole shouldn't be a concern, only lifestyle inflation. I'm stumped as to what additional arguments might be made against buying Tesla stock. To sum up, Tesla fans have a lot to look forward to in the next decade and beyond. Inflation should be the next major concern for investors as the company makes success on these fronts, increasing the potential for stock price appreciation. While this is a valid concern, an increase in inflation will have a far smaller impact on stock prices. Then why is there a problem? If inflation has no effect on one's standard of living, then it is of little importance. There may be other reasons for avoiding investing in Tesla, but I can't think of them at the moment. Over the course of the next decade and beyond, Tesla has a lot of potential. The company's stock price may continue to rise in the future if it is successful in these endeavors. Do you agree with our assessment? Leave a comment below.